Hey traders, Raghee here, and in this recap video, I'm going to cover this concept of navigating around certain stories. Now, if you are a futures index trader, meaning YM, ES, NQ, Nikkei, Russell, you really are in fact trading stocks. You're trading a basket of stocks, and this doesn't come as any surprise to anybody here. If you've been trading Dow and S&P and NASDAQ, you know there are certain names that are heavily weighted within the index. And one of the things that I do in the futures room is I have these sort of exploded views, or what I call the multi-chart, where the main market, the futures market that we're watching, or even an ETF, which is going to respond in a very similar way, is in the upper left-hand corner. And then I have this layout where the top, anywhere from 10 to maybe, in this case, I've got 6 plus another, I've got what, 14 charts on here? And sometimes I'll even squeeze more or less. So this number will change. But the first 6 are usually going to stay pretty static in that these are usually, by and large, the most heavily weighted names within this index, meaning this futures contract, the YM. So when I talk about navigating around certain names, there are certain stocks out there that are kind of, well, they're sort of toxic at the moment. And these are names like, for sure, Facebook. I think Google gets thrown in there as well. Okay, Goog and Google. So there's certain names that are pretty toxic right now. And I think Facebook, the Facebook effect is going to affect Google. It's going to affect Twitter. It's going to affect a number of other social media names. I don't believe it affects Apple in the same way. And I don't believe in, say, Microsoft being affected in the same way. Amazon's affected by tweets at the moment, not necessarily the social media sort of privacy, sort of big data conversation that's happening, but Amazon's in there. And so we're seeing a lot of these tech names being affected by whether that be the public sentiment or whether that be by presidential tweets. I mean, this is the world we live in now. I don't judge it. It's not good or bad. It just is what it is. And we respond accordingly. But I can navigate around these. So right now, I've really been steering clear of the NASDAQ because once you take an exploded view, a multi-chart view of the NAS, you realize that this is sort of, the focal point of a lot of these names. Too much weight, in terms of names that at the moment, a tweet or a shift in sentiment can absolutely make 4 of the top 6 move very, very swiftly for reasons that may not affect the others. But because of their weighting, can drag the NAS down. So we've been focusing mainly on the Dow and S&P. That's number 1. How do you navigate around certain narratives? And you have to know the individual stock narratives. And think of this going into earnings season. Earnings season is the tail wagging the dog a lot of times for futures traders. And futures traders may not necessarily give enough respect. And this is where, as a futures trader in the SF room, we start focusing on sites like Earning Whisper and then one of my absolute favorite, Estimize. And I start to show you guys how the shock waves of certain names, certain heavily weighted names within those index futures, can be the tail wagging the dog on certain days as we're just about a week away from earnings season. Now, the other thing is this, and we've talked about this before in recap videos, and that is having a direction. Now, when this market was falling, and this is even for day traders, maybe even specifically for day traders. Day traders, do you have a directional bias? And why is this so important? Directional bias really is going to eliminate one side of entries from consideration. For me, as I am sinking down into this range, namely between 23.5 and 23.3, I really have a bullish bias, which means I am going to be very, very cautious about taking any kind of short sell. And it's got to be a perfect textbook. And even then, I may not decide to take it. So I'm really looking at long only as this market on the daily time frame has sunk into a range. So we're long the daily time frame. That's something we've done. And we have it on the spreadsheet. So for my members, check out the spreadsheet. We have the spreadsheet O trades in the members area. But this also affects my day traders. And so today I said, look, this is actually a very accurate way to sort of look at the way I view day trading, in that I'm still going to look at what's happening on the daily, and I'm still going to look at what kind of mood, what kind of conviction I have via the grab candle colors. And then I'll look at a 5 or a 3 or a 2 or a 1, or maybe tick charts after I've chosen a direction, which is predominantly long only. And a short sell better be really perfect. It better have a great narrative. There better be something cataclysmic happening to make me change my mind about the shorts. Now, even when the market is having a bad day, like Monday, I'd rather stay out when I have a bullish bias. It weeds out one side of the trade. So yesterday into the close, or today into the 1:30 sort of reopening, the second half of the day, I was looking long almost exclusively. Even though there were some near-term rollovers that were happening, we used those to set up the long. And I'll talk about all the details and how we did it on the 15-minute time frame in the premium video, because this is one of those kind of trading checklists that you can just repeat again and again and again. And that 15-minute was pretty darn textbook. So I'm going to talk about that trade for my slightly more day trade, or even slightly longer term time frames for day trading would be a 15, but this is one of those time frames that I think anybody could trade. The risk is very low, and when you see setups like what I'm going to show you in the premium video, you're going to see that the criteria is pretty stringent, but when you get that setup, you go for it. I'm also going to talk about the choppy markets that are out there: crude, heating oil, gold. I really want to put on a pretty large play in silver. We're going to touch on that too. What else is moving in a choppy manner? So we're going to talk about that as well. We'll talk about the USDA crop report and how those exhaustive moves for a lot of traders are setting up some range extreme situations. That and a lot more in the next update. See you there.